Good morning, everyone. This is Anne-Marie Band. Today is July the 27th, and this is the Moneyball morning. And so what we're looking at on a pretty special day, it's an FOMC day. They release the rates. It's going to be jumpy. That's the bottom line, right? So as regular traders who may or may not care anything about macro, frankly, if you're a regular trader, do the course of the day, macro will just confuse you. So it's not, macro is about just understanding the big pictures of how things are working in the world. It's got really very little to do with how you trade day to day. And the arguing of, hey, what's the Fed going to do, so on and so forth. Listen, if you are the captain of a battleship cruiser or an aircraft carrier, you can't turn on a dime. So you have to really focus on that macro thing. But most of us here, we're speedboats, right? We are the little zodiacs that can move in and out, turn on a dime, and that is a superpower in this particular market space. And we can see that between yesterday's motion, which was straight down, to the overnight motion, which was straight up, to the coming into the opening tick of the day, which seems like it's going to give back some of it. But what are we watching? And the key thing to notice is that even with all the bad news that's coming in, everything you're reading about inflation, everything you're reading about energy, everything you're reading about food, all the things you're hearing about companies guiding down because people are just got enough money for everything that we know personally experiencing when we go to the market or whatever, take a look at the stock market and notice the following. Over the last several days and really several weeks, we're looking at 1, 2, 3, 4, 5, 6. This could be the 7th week of making higher lows or popping off our lows to close up above old lows. The thing we're not doing is breaking out. So there's got to be some measure of catalyst that pushes us there, but that catalyst could be as simple as a short squeeze. So what do we want to watch for? Notice that from the SPY's perspective, this drawing here, this big channel is the body of the prior month. If you look at a monthly candle, I have the low of the candlestick, where the month started, and where the month closed. Actually, it would be the opposite because that was a bearish candle. But that's the range. This is the weekly range. I've got it in the pink one, and you can see I'm just drawing the bodies, just drawing the candle bodies. And what we've done is leave the halfway mark at this 91. Yesterday we did it. This morning, we're back up above it, right? So this is going to be the line in the sand for us to see, are traders going to come out and push us to the north, or are they going to have sellers come in and push us back down to the bottom of the candlestick? Here's the thing that happened with the key. Well, that's weird. Hang on. Okay, so this is the weekly candle. This, you go to the last week, you draw the candlestick formation, only the body. That means the open and the close. And then if you want to make it a different color like I do, so that I know, oh, I see what's happening. So that I know what it is, then I can say, oh, all right. And you can see, hey, we tested the bottom of it, but then we immediately recovered. Notice also the great big candle, this great big formation here, that's the month, and that's the halfway spot right there, the 50% line off of that month. And so really, we have two sets of traders, one upside trying to push forward, trying to keep us above this 5 simple moving average, and then the ones that are trying to resume trend. So what we have, ladies and gentlemen, is a very messy price action formation that sticks us squarely in the middle of slosh. When the Fed reports, things get very messy. The first move is usually a fake out, whichever direction it's going in, and then there's a new move that comes. I do not know what is going to happen, but what I do know is this. The daily chart, because we've been making these higher lows, has got this upward sloping 5, but now we are under it. And in the pre-market, what we're trying to do is get back above it. We get above it, then all of a sudden we're above the weekly candlestick body, the edge of the body, and we can easily go higher. Very easily go higher. From a day, right? This was a couple of days ago. I'm going to remove it because I end up having too many drawings. But if we get up there, then all of a sudden we're in the body of this candle, and we're going to go to the 50% marker there. Try to make trading simple. Start with the pictures. Where am I sitting? Imagine if you're in a forest and you've got to find your way to the water, because that's going to send you home. Okay? Start getting your surroundings. Turn it into something that's real that you can see. And so notice, this is upward, but we're under it. This is upward, but the broad picture is down. So even though I know, hey, when I pull back, I'm likely to bounce, I'm going to bounce into resistance because the bigger picture on the 4-hour motion is downward. Same thing here. Notice, a little different. Let's go to the daily. So we're doing like, of course, the ones below are the Qs, the ones above or the SPY. No, same thing. We are under an upward sloping moving average. We are above a flat to upward sloping 4-hour average. And then this, we're sitting right in the middle of noise. Notice this wick break. I have no idea what that is, but that's a big wick, rolls down. We can see on the 30-minute, this is also down simply because of that wick. That's what's happening. You're going to see there's really no candles here. I just want to see what the technicals are showing me. That's why there are no candles there. I'm looking at this slope. And so the slope tells me I'm going to find flesh out of bottom, and then I'm going to buy it. I would not move in the middle of this space. I've got our condor set for range expansion. So the one thing I do not want it to see, is the chart sitting continually sideways. I want it to break in one direction or another. Very long today, but just trying to get your bearings about how I look at the measurements and move it into something very simplistic, and you can get a grasp of where you need to look. Yeah, a lot of lines, but again, once you get the lines drawn, you can go to your big picture events and say, okay, I'm just walking up through my spaces. Notice we are caught between this line and this line, and that's the upper edge of that week. Flat moving averages means it will spend time below and above, and just take it one step at a time. Somebody asked me last night, how do you get good at reading the market? It's by trying to read it over and over again and saying, okay, if I lose this level, what does that mean? Well, it means I'll step down to this level, more than likely, especially if I've got a downward moving average formation. And so that gives me that. But if I've got this 50 that's moving up, I also know I'm sideways. So what's the bottom line, folks? It's a messy market. You've got to be careful. You've got to be careful. See you on the Benzinga Pro platform.